Hi, I'm Tom Lydon, editor of ETF Trends here in Chicago at the Morningstar ETF Invest Conference. And I'm here with Scott Burns, Director of Fund Research. Scott, thanks for everything you've done. I mean, this has been a blast today. I know you must be tired.
I'm tired, Tom. Thank you for being here, and ETF Trends for being here. So I'm glad you guys are having a good time and getting a lot of good information.
We are. It's been by far the best yet. And a lot of it has been the spin around this news, the big news that Vanguard made the move from MSCI to a couple other index providers, all with the idea that costs could be pushed down a little bit further. I know that's something you at Morningstar watch on a regular basis, but how important is that to the average investor?
Well, I think cost is different for different investors, right? And I actually think that this, one, it's going to put overall pressure on costs. I think in the winners and losers, not only for an MSCI do you lose that business with Vanguard, but then your negotiating position is weakened. And I think the stock market saw that as well, and we saw what unfortunately happened to their stock the other day. But the other thing I think it creates is a more natural demarcation between products that are for institutions and products that are more geared towards advisors and retail investors and even longer term holders. So, I think the institutional ETF user who is largely benchmarking against things like the MSCI international funds, which are the generally accepted benchmarks, or have mandates around that. I mean, you go outside of the U.S. and some of that's actually even written into the legislation, right? That they're going to choose that, and they may pay a premium to be able to do that. For other folks, a little further down the investment chain, I don't think it's going to matter as much. Here's the test I always do. Tom, name an S&P index.
Yeah, S&P 500.
Name another one.
Right.
And you can do that with anybody, And so I think, we're going to also see a test of brand, and that's really what this is about. Whose brand is more important, right? Whose value, is it the asset managers or is it the index providers? Yeah. I think for some cases, the index provider's brand is very strong and it's a very strong value proposition. But in others, I don't think it's going to be as strong. So I think it's going to be a very interesting, real kind of dichotomy in how people use and look at these products.
It's going to be fun to watch. Now, Morningstar is obviously committed to the ETF space. I know you're putting more and more resources behind it. Tell us a little bit about Morningstar's involvement in ETFs and kind of some of the new and exciting things that you're working on.
Yeah, well, from an investment research standpoint, and by investment research at Morningstar, I mean it's clear everybody thinks that investment research starts with the team I manage, but for us, investment research includes the data and includes the software tools like our Morningstar Direct and Advisor Workstation, and even Morningstar.com. And then there's the analyst research that goes on. And so, we're working together with our colleagues in data and software to create digital solutions, to create unique data points. At the conference this year, we handed out the Morningstar Award for ETFs. It's the first Morningstar Awards that we've actually handed out in the U.S., and we did it for ETFs. And we did it, based on total cost analysis work that we've done in data. And and the reason we did the awards is I've been trying to get people to pay more attention to this, and it's been a challenge. People are still using really weird rules of thumb, like, well, if it trades 100,000 shares a day, then it's liquid, or expense ratios. Focusing so much on the expense ratio and ignoring all the other things that can happen. I mean, if you buy a 10 basis point ETF that has 80 bips of tracking error or estimated holding costs, as we call it, you paid 90 basis points for that. And you would have been better off paying 40 basis points in expense ratio for the one that only had 2 basis points of tracking error. So, trying to pull that back and really provide a standardized way for individuals, institutions, advisors to not just, know which ETF is best, but to know which ETF is best for them, right? And ETFs are a digital technology, and so we're trying to embrace that, and say, look, if you can tell me a little bit about you, I can tell you from a cost perspective which fund is right for you, because there is a difference.
Well, congratulations on the awards, because I know on the fund side, the conventional fund side, that's worked for you and many investors over an extended period of time. But before I let you go, we've got a whole slew of these third-party ETF managers, and they're excited. They're interacting with the providers. It sounds like this thing is just booming. Can you mention that at all?
Yeah, we did a track expansion this year and really created an investment track in the conference for the ETF managed portfolios. And while I'm glad they're interacting with the providers, my ultimate hope would be that they'd interact with the advisors who are in the audience. And I looked at it, and we identified this space a couple years ago, and I said, this is happening, and we worked on it some more, and then I brought Andrew Gogarty onto our team to really put some meat around it and some data and research around it. But when I looked at our conference, I said, look, this ETF conference, all ETF conferences, frankly, are do-it-yourself conferences, right? And there really is no venue right now for the advisor who's looking to outsource the management of those ETFs and the people who are looking to do the outsourcing to connect, face to face. So, the thought behind adding the ETF managed portfolio track and the gallery was to really get that ball rolling, to create this network, so that the advisors who need to due diligence these managers just like they would any active manager have an opportunity to do that, have an opportunity to hear the new ideas. I mean, investing, whether it's ETF managed portfolios or active managers or passive funds, is always about trust. And trust can't be delivered through pieces of paper. Trust is always delivered, face to face. So we're very excited about it. I'm glad it's, sometimes you think something's going to be big, and then it turns out to be really big, and you're like, well, hey.
Good for you. And thanks for having us, and thanks for being such a great friend. Look forward to catching up with you again soon.
Definitely, Tom. Thanks for being here.
It's Tom Lydon, editor of ETF Trends at the Morningstar ETF Invest Conference in Chicago.